All right, welcome, new member Chris, 35 years old, generation millennial. I asked generation just to see who's Gen X and who's Gen Y. We have gotten no Gen Z yet, which is makes sense. They probably don't have money. Let's be real. Okay, so you got 25K. That's good. Already head and shoulders above the people that come in to the Discord. They join with 500 to their name and no job. So hopefully you have steady employment because that's important too. I do not journal my trades, but I look at my past transactions. That doesn't mean anything. You're not looking at your trade. You better be reviewing the losses more than anything. That losses are more important. Wins. No, wins aren't important right now. Making money right now isn't important. What's important is protecting your account. Because there's people in this Discord with like 6 figures, 7 figures. They lost a lot of money on Rigetti when it dropped 50% because they were greedy. So imagine losing 300K. Yeah, it hurts more when you have more money. So definitely review your losses at the very least. Reviewing your gains is definitely important too because you get to see like, I think my strategy for this specific stock works very well. Maybe I should just stick to that one that makes me money instead of jumping around all over the place. Like you'd be surprised by the kind of data you'd be able to find keeping track of your trades. In Excel, that's what I used to do. I still do it actually now that I think about it. I have the trade tracker room. Do you always have a clear entry and exit plan? No, but I wait for a dip on a stock that I see potential and research on TradingView. Wait for it to gain 30% from entry point, then put a trailing sell order of 8%. What do you mean though? This is not a strategy. This doesn't seem like a strategy. It seems like you're just buying the dip, hoping it like bounces. But what's your game plan if it keeps dipping? Do you just keep buying more, or like what? The downside I see with your game plan here is is you buy something that just keeps on dipping. Number one, number two, you buy something that dips and you think it's a buy, and then it just like gaps down like 50%. Like that happened with Rigetti on a lot of people. They bought the dip thinking, oh, this is gonna, what a dip, right? Yeah, it dipped like a buck, and people thought it was a buy, and then it dropped 50%. So there's some downsides here to this strategy. And what's your indicator? Like, how do you know like this is a buy here on this dip? Like, what dip specifically do you look for? Or like what like do you use an indicator or levels or like what candle patterns? Like what patterns historic? What are you looking at? Because this the more your strategy, like if you were to write your strategy down using a simple if stock, you know, whatever dips, I guess, buy and set stop loss at whatever. Like, what's your strategy? Like, this doesn't really tell me anything. It seems like you have something, but it's not very well thought out because it comes with some glaring weaknesses. Because it's like, oh, it dipped, woo, right, and then it just keeps dipping, or it drops 50% because of some bad news or whatever. So that's what I'm seeing right now. Like, just off the top of my head. How do you define a successful trade? 30% gain. Ha! Yeah. The most important thing is not. It's not the gains. The gains will come with having a stop loss. It's your strategy. Strategy is the most important thing. A successful trade, 30%. Yeah. The only way you're getting that is if you're. I don't know what you'd be trading. You'd have to be trading like dollar. Yeah, you'd have to be trading stocks less than like $50, maybe $10 or less. You'd have to be trading stocks that are volatile to be able to make 30%. You can't even make 30% on Riot stock. And that follows Bitcoin and it has that volatility. It can jump 20 to 30%, but not. No, yeah, you're definitely trading cheaper stocks because Nvidia, Google, all these other big stocks, all these big boys, they don't move 30% like that. They can, but it takes time. But they're safer. So the fact that your strategy is to buy the dip and you look for 30% plus gains tells me you're probably trading stocks under $50 or if not under like 30 or something or under 10 because you believe cheaper is better or something like that, probably. That's usually the trap people fall for. Oh no, Nvidia's so expensive. I can buy like way more of this other stock because it's like cheaper, but it's also more dangerous. So, and you have a strategy that's weird. Like you buy the dip. What happens if it keeps dipping? Like you have a stop loss strategy when it goes up in your favor. What's you just keep buying the dip if it keeps dipping? Like what's the strategy there? What's the stop loss strategy? What's the strategy if it goes against you? How do you handle trading losses? Well, when Rigetti dropped, well, okay, so you're one of those guys. Yeah, there's plenty of guys and girls in the Discord who also got caught on the Nvidia big mouth CEO causing RGTI to drop. I was being greedy, and that one is on me. But usually I handle it decently. Well, you need to work on your intuition and emotions, because that's what that is. I don't know. So many people chased RGTI at the top. I'm assuming you chased it, because this is a question asking how do you handle trading losses. So I assume you bought at the top and then it just dropped, right? That's what I'm assuming. So yeah, and you are, yeah. So and you're also trading stocks that are under $30. That makes sense. So yeah, see, you're never gonna really see Nvidia drop like 50%. It did drop recently, but not 50%, and it's already on its way to recovery because it's a well-established company, and we know everyone's gonna have to buy chips anyways from Nvidia. Like, hey, DeepSeek, what chips did you use? Nvidia. Oh, well, this is stupid. like, like I guess we still have to buy from Nvidia. So it's an established company, which means you don't have to worry. This is why I trade Nvidia and stocks like Nvidia. It's an established company, and you don't have to worry about no 50% drops like that. Like literally, the CEO opened his mouth and caused a 50% drop. You don't have to worry about that with Nvidia. In fact, if it happens with Nvidia, it's an opportunity, as you just saw. It's nothing more than an opportunity because people are stupid. So yeah, that was just greed. That was all emotions right there. I guess you feared missing out is what that's what it is. I assume. Like, oh no, it might go to 100. Let me jump in now at 20. Oh no, that big mouth CEO. Oh no, now I'm down 50%. One girl lost like 500K. I was like, whoa, what the hell? So it just comes to show you it's all about skill and discipline and patience. Doesn't matter if you have 30K or 100K or millions, they can all lose it really fast. The market does not care about your account size. How patient can you be to get the desired results? You'll be fine. You'll work a job. There's people that come to me wanting to get rich quick with no, they don't even have like 25K. They have $500 to their name and no job. I'm like, what? Here's your money back. Blocked. Like, I don't want your money. I don't want you in my Discord. I had to raise the price to $50 a month to weed out the cheapskates, the Karens of the stock market, to weed out those people. Because too many people would join thinking they're going to get rich quick with like $500 to their name. And I'm like, huh? And you have no employment? See ya. Like, you're already ahead of the game. Let me put it that way. Do you make decisions based on logic, intuition, or emotion? I don't even have to read your answer. I can tell right away this is all intuition and emotion. Like, I really hope you're not just buying the dip just to buy it. Like, I hope there's a strategy behind that. And yeah, that's that. I hope so. Like all three, but as time goes by, emotions seem to be the last when it comes to making decisions. Started in October 2024. Yeah, you're definitely a newbie. Your intuition's gonna suck. Your intuition actually works against you. In the market's intuition and emotion, it's better to be logical because intuition and emotion are just gonna. It's the market feasts on people who use intuition and emotion because you don't have experience. So how do you have the intuition for something like this? You don't. It's like learning boxing. You don't have the intuition to move like they do. Bobbing and weaving and slipping and turning and rotating the hips and throwing and moving all at the same time. Like if you try right now to, well, unless you know how to box, but if you tried, you'd realize that you might not even have the stance right. Like it's not intuitive at all to learn how to box. It's a real skill and it takes time to learn it. So your intuition is no bueno, is no good. You get in the ring, you're just gonna get your ass beat because your intuition sucks. Like you might think, oh, here he is, let me hit him, but they have so much experience that they don't. Like they just see it coming from a mile away because they've seen it 1,000 times. Like it really all comes down to experience. You cannot trust your intuition in the markets because it can lead to you being emotional and losing money. The markets, yeah, they feast on that. So you gotta stop being impulsive. Yeah, hopefully you learn from that Rigetti drop. Are you impulsive or do you study before acting? Both, but again, as time goes by, my impulsiveness has decreased, but it's still there. Why is it still there? Oh, because you want to get rich quick. Or, yeah, because you want a lot of money fast. That's usually why. It should have gone away the moment you lost money in Rigetti, but there's a lot of people like that. They lost like 50% on Rigetti or more, and they're so desperate to make their money back that they lost that their impulsiveness is still there. Like, they go in with their full account. Like they lost 300K and they want to make that 300K back so badly that they go in with 300K on stocks to hope to double it so they can get their money back. They kind of fall into that another trap that people feast on. The market feasts on people like that too. So it's yeah, yeah. Again, impulsiveness, intuition, all that is trash. You gotta stick to more being logical at the beginning. Once you have my level of experience, then you'll be like, oh yeah, today's a good day. Like you can just look at the charts and know already, like instantly. Like you're probably good at what you do. If I tried to do what you do for a living, I probably would. I would. My intuition would suck. I would suck at it. That's just how it is with anything. You just got to work towards it. How do you learn best? Mentor does help me. Married, 3 kids, very busy, watching videos and reading. Okay. What are your current generation strategies? Yeah. Okay. So I've got a good read on you from the very beginning. I kind of already figured you out. What are your current strategies? I've so far only mainly looked at stocks below $10. Makes sense. So I had already I had already categorized you from the very beginning. $10 and under, but I do make exceptions. Looking at growth stocks, mainly tech, and watch economic announcements like Fed speaks, GDP growth, jobs reports, etc., and try to buy dips. Yeah, try to buy dips on garbage though. It's a dangerous game. Like I said, I hope your strategy isn't, oh, this dipped, and then if it keeps dipping, I buy more. That's how you fall into the trap of, oh, I just keep averaging down, and next thing you know, your whole account is tied up, married to this stock, essentially. And then you just become one of those people on stock tweets or on Twitter going, oh, just you guys wait, we're gonna come back up. I've seen it thousands of times. I've seen that. It's so I really hope that's not the case. I hope you buy the dip and then if it keeps dipping, you go, oh, ooh, let me, I'll get out and rebuy. I don't know. You better have a good strategy. Like you can't time the bottom, but you can definitely time the reversal if you know what you're doing, or if you're using indicators, historical patterns, stuff like that. But since you didn't really tell me your strategy in depth. I don't know. You just said you buy the dip, and if it goes in your favor 30% plus, you set a selling trailing stop. But what do you do if it doesn't go in your favor? Do you just keep buying the dip? Like what happens there? Do you plan your trades? Probably not. How did you get into trading and why? Okay, trading goals. You have 25K. Like you could technically just buy Nvidia and sell covered calls on it. In fact, you can sell a put on it and get paid to buy those shares of Nvidia at that point, and print a nice little like what $300 check or more. I think it depends. But anyways, trading goals. When I first saw your YouTube channel, I realized that a lot of stocks that you were picking were good ones. Were ones that I was looking and buying through researching them. So that was a positive to me, but my entry and exit strategy is still not good. And I would like, okay, so yeah, I figured. And I would like to get better at that and do a better job at finding good companies. Finding good companies, you're only going to find good companies at. So here's the thing: a lot of people who go into the markets, they think that they're special and that they found something that no one has discovered before. Like they go research stocks and they find a stock that they think is, oh my god, it's undiscovered, it's a hidden gem, no one knows about it. And then they tell me about it and they go, see, no one's discovered this. Look at this. It's the future. It's going to go big. You just wait. And I'm just like, uh, I've been in the markets for 4 years. There's nothing that's undiscovered. like, like it's everyone has looked at it before. Everyone has looked at it before. If it was really something worthwhile, it would have moved already. The majority of companies in the stock market aren't that great. That's why the blue chips stocks, they're called blue chip for a reason, because they're established, they're actually good companies, and they just continue to go up over the long term. So just don't fall into that trap of thinking, oh my god, I found this stock that's so undervalued, and oh my god, look at the revenues, and if it's sitting at $1 and under or $5 and under, there's probably a reason for it. So yeah, just don't fall for that trap, because I've seen it too many times. A new person in the market thinks they found the next undiscovered gem, and I'm like, huh? Sir, I already knew about that 4 years ago. It's just sitting there in the same at the same share price as it was 4 years ago. It's garbage. And then they keep trying to convince me that I'm wrong, and I'm like, uh, I just told you that for 4 years it's just been sitting there. This is not an undiscovered gem. It's trash. But some people have to learn the hard way. Finding good companies, yeah. I don't know what. How do you define finding good companies, though? That's my question to you. I define it as it just keeps going up over the long term, which is why I focus on Nvidia so much, because it just keeps going up over the long term. And the reason it does is because its revenues keep growing. So it's more about performance on the stock versus the actual company itself. Because usually, if the stock keeps going up over and over again, year after year after year, like Nvidia does, that's usually a good reflection of what's happening within the company as well. So I don't know. Like if you find a good company, please look at the yearly chart and please check that it's actually going up over the long term. Like because like I said, people fall for that trap. Oh, I discovered the next big thing. You just wait. And I'm like, no. Like, sir, people knew about that one 10 years ago. It's just been sitting there. So, for example, not AITX, NVIDIA. Yearly chart, what do you see? It just keeps doing what on the yearly chart? It just keeps going up. Any red year that we had on NVIDIA was nothing more than an opportunity, because it just continues to go up over the long term. And the trend keeps getting steeper. So please look at the yearly chart before you even, like, don't assume just because it has good financials or whatever that it, or whatever your criteria is that makes you think this is a good company. Always like look at the yearly chart first, because it can have all the great numbers or whatever. If the market doesn't care about it, then it's just going to sit there and go nowhere. And a great example of that would be where's Riot stock. It's got great numbers. It's not bad. It's not a bad stock at all. It's not trash. It's not Nvidia, but it just goes sideways. So if you invested in this, I mean, it's good for trading if it goes under $10. For me, at least, that's my strategy. But you look at this long term and you're like, well, it just keeps going sideways. So you can abuse it if when it gets under a certain price point, but it's better to trade something that just keeps going up, right? Because something that keeps going up like Nvidia, well, if it keeps going up over the long term, then isn't it hard to lose? I want you to think about that. It's hard to lose, no? Because you can just keep buying the dip and it always comes back up. That's what I just showed you. Like, for example, let's say you bought the dip here and it just kept going up. You bought the dip here, it kept going up. In fact, even if you don't buy the dip, even let's just assume you're really bad at trading and you time the top. You time the top. You're very good at timing tops for some reason. You bought here at the top, it pulled back from 97 to 77. It still came back up for you and then some. And then you timed the top here at 140 and it came down as low as 92 and still came back up for you and then some. And, kind of, wait, right? It's almost like even if you're bad at trading it just keeps coming back up for you, even if you time the top. Even if you're so bad that you time the top every time, it's almost like it's hard to lose. So that's like the benefits of trading something that just keeps going up on the yearly. Just wanted to show you that. Because you're gonna find companies that you think are good, and then you look at the yearly chart and you're like, like it's not really doing anything. Yeah, it's better to trade something like Nvidia that has that similar yearly price action, where you can kind of go, oh, well, it's kind of hard to lose on this one because it just keeps going up, and any dip is actually just an opportunity. That's just me telling you my thought process and how I see it. Going with the tech flow, do you follow? I know you don't. Nobody does this. Do you go all in or follow the trade with only 2% of your account rule? For example, you have 100K, you trade with 2K, thus making it very difficult to blow up your account. I'm more of an all in because I knew it. I already knew that one. That's how people blow up. They go all in. You know, it's funny because your strategy, at least you have one, but the one time you get screwed, you're going to get destroyed. Like the one time, if you ever get caught on another Rigetti move to the downside, like a big gap 50% or more, that's going to destroy your account if you're going all in. So you can make all the money you want literally for the next couple of months, and but the one time you go all in and you get caught on the wrong side of that, you're going to lose all of you. You're going to undo everything in one go. So yeah, that's I've seen it before. As and so, unfortunately, some people aren't going to listen to me. They're going to learn the hard way. I'm more of an all-in because, like I said, it's money that I can afford to lose, but I absolutely don't want to do that. Well, the problem here is, even if it is money that you can afford to lose, it doesn't matter. It doesn't matter. This is not even the problem. The problem is you can make all this money, grow your account from 25K to 100K. If at 100K you still have that mindset of, oh, I'm going to go all in because you're saying I'm more of an all-in. If you go in with all 100K when you have 100K and it drops 50% or 80% or whatever, you get caught the one time you get caught, it undoes everything. So you can spend like a year or 3 or 5 growing it to 100K or whatever. It doesn't, you undo that in one trade. So it's kind of like you just wasted your like years of your life growing it to 100K just to go all in 100K on some stock and it just drops. And it can happen. You've seen it. So you can't even say I'm lying. So that's really the biggest issue there. That's the big issue. And I'm saying this because there was a Polish girl in this Discord who had, 600K to her name. She lost 50% on Rigetti, and she was down to 300K, and she's still going all in. Like, she didn't learn her lesson. Like, she's still going all in to try to make the money back. That's her mindset. And it's all psychological, too, but, yeah. Yeah, she's gonna blow up, is what I'm saying. Because I had to kick her out because she was like threatening to sue me or something because I made a video like this and she I guess took it the wrong way. I don't know. It seems like she was just looking to sue someone for money. Like she doesn't want to work, wants a man that's gonna take care of her and doesn't want to work. She's unemployed too, but she has money. But here's the thing: it's not about the money. It doesn't matter how big your account is. It's about the skill. She can turn that 300K into 1.2 million, and it doesn't mean anything because the moment she gets caught again, which it will happen because that's what happens to these people. They'll get caught on the wrong side. They'll lose 50 to 80% of that, and they're right back to where they were, undoing everything. Undoing everything. So it doesn't even matter. It doesn't matter how big your account is the point. It all comes down to skill, discipline, and patience. So, but you do you, right? You'll learn the hard way. Unfortunately, I've seen it too many times. They don't listen. They will learn the hard way. What do you do for risk management? Stop loss, scale in, scale out, depending on situation. Stop loss is not very it's not very descriptive. Like if you ask me, hey, what's your stop loss? I would go, okay, here's my stop loss, my friend. Yeah, let me see, where is it? Okay, so here's my stop loss. I enter NVIDIA here. Let's say, if it touches the purple line, I buy. Stop loss underneath the purple line. If it goes up, I make money. Okay, easy. And rinse and repeat, right? Oh, look, it got close to it. I'm buying here. Stop loss underneath that purple line. Oh, I made money. And yeah, same thing here. Ooh, I bought in here, stop loss, and boom, I made money. Like it's just, I don't know. This one's easy. This is the strategy. I'm showing you my strategy, the 200 strategy. Anytime it comes down to the 200 and under, just buy it. I don't use a stop loss for NVIDIA because what did I just show you? It's hard to lose when it just keeps going up for 20 plus years. But that's a little more advanced. I don't. You. It's easy for me to say it's easy, but yeah. Your stop and you trade smaller stocks, more riskier stocks. So I don't. Your stop loss has to be like on point. On point. Do you learn from your mistakes and make adjustments? Notice I'm not talking about money. Hey, you're gonna make a lot of money, lots of money, lots of money. No. Stop loss, stop loss, stop loss. Probably the best risk management you can ever have. Because I asked you about risk management, but here's the thing: the best risk management you can ever have is just not going all in. Because I just told you you can go all in every time and make a lot of money. The one time you go all in and you're wrong, and you lose a lot, you're gonna undo all that work, and it can be years of work. I've seen it before. So it's not even the fact that you answered stop loss, scaling and out, and the fact that you didn't take into consideration that hey, the best risk management is actually just not going all in, because you can afford to lose 2K or 5K. It's no big deal. You would have to flip a coin 5 times and land on tails to blow up your account if you're just going in with 5K. And even then, grab a coin, flip it 5 times. It's going to be hard to get, you know, tails 5 times in a row. But if you go all in, flip a coin, and you land on tails, that's the one time you lose quite a bit. It's simple. What probabilities? Is that what I'm talking about? Maths. Simple maths. Do you learn from your mistakes and make adjustments, especially after I lose money? I hope you're not lying though, because some people say, yeah, I make adjustments. What adjustments? Because the first adjustment you should have made is not going all in. You should have learned, oh my God, stocks can drop 50% on me overnight? Huh. Maybe I shouldn't go all in. Like that would be like that would be the lesson there. So hopefully you learned, because you say yes, but if you're still going all in, if you're saying you're an all in kind of person, then you haven't learned anything. That's what you have not learned from that mistake, and you have not made the adjustments. You should have learned from that. You should have been like, holy crap, I should not go all in because I can lose a lot. That's the adjustment you should have made, but you still you said it yourself. Like I'm a very go all in. I don't care if I lose it. But that's not even, like I said, it doesn't matter. It's you can make all the money you want. If the one time you go all in, you land on tails, you're gonna undo you're gonna undo everything else. You're actually working against yourself at that point. Anything else I should know? I'm not looking to day trade, more swing and positional. Oh, then you've joined the perfect Discord then, because that's all I do really is swing trade and yeah, positional. My account color 3,250 shares bought at 212. Rigetti at 1361. RR 1,000 shares at 260. At 260, shouldn't you be in the green? And why did you buy at 260? I'm pretty sure I told everyone to buy at 240 is when I told everyone. If you're actually paying attention, because one guy in the Discord chased. He like bought it up here at yeah, he bought it at like $3.20, and then he like messaged me like, oh no, it dropped so hard, like, and I'm like, huh? Well, why did you buy at $3? Oh yeah, you're in the green. You're fine. But one guy didn't. He's not paying attention. Like he's not paying attention to the Discord. For some reason, he subscribed to the Discord, and he's not paying attention. Which is like, what? Are you stupid? I didn't say that to him, but I thought it. Like, what are you, an idiot? Like, you're paying money to, like, get this stuff, and like, why are you, huh? It just didn't. I don't know. It's like people join the Discord and don't pay attention. I don't know. It's just weird. But at least you were paying attention. Yeah, you bought it at a good price. But I told everyone to buy it down here at this red candle near support. So you're fine. But it would have been preferable to buy down here. Yeah, no, this one's a good one. This one's a good one. Long term, it's just holding a bottom. Any questions or comments for me? Thanks. Well, I think I already told you everything. Well, yeah. I think I told you everything I need to tell you. Color stock Rigetti. You know what I've noticed is, what I just noticed is the stocks you're holding are all risky. Color stock is risky. RGTI is risky. RR is risky. I mean, yeah, they're all risky. They're all tech, but they're all risky. Like I said, they're not well established companies like Nvidia. So, and you have 25K, my friend. Why are you even bothering with these? I think, okay, it's fine if you have like some of these in your account, but you should probably have maybe like, I would say 30% dedicated to something that's established, and then the other 70% dedicated to these riskier stocks. Because if all of these go against you, I don't think I need to tell you what happens, right? If all of these go against you and they just drop like flies, because too many people, they assume the best, right? They assume that they are geniuses, they pick the best stocks, things are going to go up forever, they're going to come back up. They make all these assumptions when the market doesn't care. I don't care either, and the market doesn't care what I think either. That's why I showed you on Nvidia the yearly chart. It just keeps going up. The market doesn't care if you don't think it's going to keep going up. It's going to do what it does, and for 20 plus years, Nvidia keeps doing that. It just keeps going up. So I think you should dedicate at least a portion to, Nvidia, Google, Apple, or any of those stocks that continue to go up. And then the other ones you can risk it all, and maybe it works out, maybe it doesn't. I don't know. People always ask me stupid questions like, "What do you think of this? Where do you think it's going to be a week from now? Is it going to move now?" Like they ask stupid questions that I'm like, I'm not a like I can't predict the markets. Like what I can do is position myself when it gets cheap. I don't know if it's like I don't. People just ask dumb questions that I'm like, are these people like, do they see me as some kind of genie or something? Like I'm just supposed to like. I always post an 8 ball just as a sarcastic response because I'm like I don't know. Like how am I supposed to respond to that? Like I don't. Hey, what do you think of Rigetti? Is it a buy? No, not for me. I'm not gonna buy that trash. Give it to me at like 10 and under, and maybe I'll consider it, but not at 13. Same thing with color stock. People ask me, do you think color stock's a buy? And I'm like, no, not for me. I'll wait for the purple line. I'll wait for 180, 170, 150. I'll wait. I'll wait. I don't care. If it doesn't go down there, then oh well, I don't care. It's just I don't think about that stuff. I don't think, oh no, I missed out. Oh, if I had bought it 212, I would have made money with Chris here when it pumped to like $10. Oh no, like I don't really. That doesn't mean I don't care. Like I just don't care. Like it's give it to me at the price that I want it at, or fuck off is what I tell the markets. Like literally tell the markets, give it to me at this price, or fuck off. Like be mean to the markets because the markets don't care about you. Like you know what I'm saying? RR 1,000 shares at 2.6. That one's probably the best one out of all of these because robotics is it's near term. Like it's the future, but it's near term. Whereas RGTI, the whole quantum computing, that's more long term, like long term. Like everyone's saying it's 10, 20, 30 years away. So yeah. So I would. That's why I haven't touched Rigetti because I'm like, this could still drop. I mean, it literally dropped on Monday while Nvidia was showing strength. So that just comes to show you what's happening there. Color stock is slowly bleeding out. So that's why I'm not touching either of those. RR is the only one holding a bottom. That's the only good one. And again, it's robotics. It's more near term in terms of potential. And Serve Robotics is like I think it's at like $19, and it's also a robotic stock. So technically speaking, Rich Tech Robotics here should be worth more than where it's at. But am I gonna buy? Hell no, I'm not gonna take that risk. Why would I do that? I just I just showed you Nvidia keeps going up. And once you have 6 figures to trade with, you don't need anything else. And you know what's stupid? Before I let you go, there's people, like I said, with like 300, 600K to trade with, or millions to trade with, and they still feel poor. They still feel poor. They feel like they can't retire. They feel like they still need to turn that 300K or 800K into like tens of millions to feel comfortable. Like they still have like like they have 6 figures. They can be just trading Nvidia and printing money because it just keeps going up. I just showed you that. But because they literally have the mentality of someone that has like $500 to their name. And there's people that would kill for 300K and they would kill for a million to trade with. But these people still have they still have the poor people like mentality. It's hard to explain. It's like weird. Like I've seen it too many times. Like, bro, you have 500K to trade with. Why are you trading garbage? Well, I want to turn it into a million. Like you have the money where you can just trade safer stocks and print money. Like you're on a whole nother level. But they still, like I said, it's all skill. It doesn't matter you whether you have a million or not. If it's all psychology, it's all skill. So that's all I have to say. But yeah, I just wanted to tell you like color stock not a buy for me. RGTI not a buy for me. And RR, that one I might buy if it comes back down. I might. It's we'll see. But it's just at this point, it's like I'll just buy Nvidia because it keeps going up. Yeah. So you take what you want from all that. That I don't. Yeah, it's on you, right? It's on you. I cannot help someone if they can't help themselves. Let me put it that way.